This is London with Bitcoin Spike and VIP Trader just before the New York Open, noting Tesla slightly up. We're going to note that NVIDIA also is slightly up, and an interesting pattern is NVIDIA and just slightly up above a level of resistance. We're going to dig into the details. This is London, former hedge fund owner, private, non-SEC, not financial advice. Let's dig into Bitcoin as well. We're 8 wide, just so that you know, and New York is open. Look at the pop that we have on. This is Tesla up and out into a short line. We're going to look at NVIDIA real quickly. I'm really interested in the patterning framework guys, if we're looking at a pattern versus a flash trade on open, the specifics that I brought to the VIP in the back are on NVIDIA. We have a flag formation that the market is assessing on NVIDIA. Pay attention. Orders are stacked below, without a doubt. Micro 3-minute time frame. Please pay attention, okay? In terms of the specific cup and handle feature, we have a specific threshold of 438 to beat on NVIDIA. 438 is that specific cup and handle feature line that would be looking at a confluent breakout of a bull flag. I hope you're all doing well. Excited about today's interest rate incoming, without a doubt. Tesla paying the shorts. Boom. What did we hit on the specific, looks like Tesla on the 15-minute right into the specific top standard deviation line, looking for a potential rehit on the 20 moving average. Tesla out up early and back down. Nice hit along the specific short line on our golden short line. In terms of the dynamics, if you are accustomed to flash trading, congratulations. What are we hitting? The specific 20 moving average. 20 moving average on the 4 hourly is engaging right now. That's a level that bulls need to hold. I'll just tell you, in terms of Tesla and the pattern dynamics ongoing, the 20 moving average is one of the key ticket items that we look at in terms of the critical technical infrastructure of, and mind yourselves, the key critical technical infrastructure, those indicators which are bedrock, the specific time frames and indicators which are bedrock. We looked at that 4 hourly 20 moving average as a consistent, relatively consistent, if not highly consistent, level at which trades engage. Levels at which, if you're long, you're typically interested in gaining some exposure. All right, if you're underneath, and let's say that the indicators overall are bearish, you're interested in typically gaining some exposure to the downside, right? From either below short or above long, looking at a level of reinforcement and reminding ourselves that Tesla pushed quite a bit. We've had some very, very highly precise moves on Tesla and on NVIDIA. So to the extent that you have gotten pushed around just a touch, remember, until you're at a point you can book 4 positive trades, I recommend that you not, just personal recommendation, do as you choose. You let me know how it works out, but I recommend that you not be overexposed in the markets whatsoever. I want to shout out to Venus. Morning, good morning, good morning. What's going on, Venus? Nice to see you this early in the morning on market, always there front and center. And yes, you know the 4 hour power time frame. In terms of the details, let's look at NVIDIA real quickly as we watch that 4 hourly try to hold. All right, let's look at NVIDIA. In terms of the daily time frame, let's remind ourselves, and out of the corner of our eye, we do catch what? Cap line on the 4 hourly. You see that engaged. Now, you can't even look down at this specific area of your screen if I'm going to the daily. And remember, we have the 3-minute, the 15, the 30. We have the hourly. We have the 4 hourly, the daily. And this is laid out not so that you'll be able to zoom in and see every single move. Remember, we have a delay on the stream, just about 8 to 10 seconds. The important part here is to go through, I would say, just the simple fact of the analytic that is ongoing and how quickly you can acclimate to the price action that is ongoing. For instance, if we were to look at, and I headed over here to look at the daily, what immediately catches your eye when you look here in this zone? If you're looking at the daily, what catches your eye? The specific cap line on the specific 4 hourly, and Venus, you brought that to our attention in terms of that 4 hourly doing well on the cap line yet again, but quick. I mean, in terms of the quick assessment, it's definitely required. It looks like we're bouncing right off that specific lower pro line here. So nicely done on NVIDIA. And as you look further to the right here on the daily, we have some levels that are in play without a doubt. Those are some key levels of reinforcement that I wanted to bring to your attention, but we can't get through to the daily without catching the specifics from that 4 hourly. Level of support incoming. Kind of a, let's take a look at this, the details here. Real muted open, we have to say, 0.2%. Tesla really flat, 0.14%. So some micro moves in play, but on the weekly, we also catch the specifics here. And it's just as you look at the specific technical indicators, as you look at how the charts are formulated, you're going to be picking up on the guys on the let's say on the most highly relevant technical interfaces, indicators and or time frames that will manifest themselves as the most relevant. Correct. On the weekly, for instance, the 20 moving average, a slower time frame, but you still see this specific 20 being highly relevant. You can't miss that if you're looking between the 4 hourly and the daily, right? And I will clean the daily up here just a moment again. As we were to look at again, the specific downside target here has been met on and satisfied on NVIDIA to the extent that you traded that, and I know that VIP did. Congratulations. Looking for the reinforcement. Where were we at in terms of the 4 hourly? Let's go back to Tesla. Let's see how we are doing on a slow unwinding open. These are just one of those near paralysis for. You have to say, in terms of this, guys, it's just a standstill, as we would look at on Tesla, just really locked down. However, we do see some micro trades engaging at the specific 20 moving average, small moves, right? 0.25% in terms of that move. Still a trade. We will note that on Tesla within the first 6 minutes. Really what we say, just a muted open, it seems like. But you do see the level of enforcement. What's important on a day like today with the FOMC incoming, let's just say the interest rates, okay? The Feds are determining interest rates today. What's important is that we understand that a soft, let's just say a slow open may mean, guys, it may be expected. Let's just go ahead and say that. It may be expected that we're kind of on weighted breath in terms of what will occur at the press conference. They've been a bit underwhelming. I think that most of the expectations are baked in, as they would say. We have a good level of understanding in terms of the communication from Powell, Fed chair, in terms of kind of what's going on. And we haven't had much in the form of surprise, okay, recently on our specific key data releases, economic data releases, such as CPI, et cetera. You guys are fluent in that regard. Taking a look at the 30-minute on Tesla, nice hit back into the 20, nice hit, perfect hit back into the specific cap line function here. And again, while this may seem overwhelming, what I will assure you is the following. Once you lay this out on your specific computer, once you have this up in front of you, it becomes immediately very relevant which specific lines, okay? And these are just technical indicators. Which specific indicators are relevant right now, right? For the weekly or for the, let's say the monthly, you may be looking at a trade every 2 months, every 3 months, the weekly, every few weeks. So to the extent that we'd still like to maintain the viewpoint of the weekly, just understand that that kind of eliminates this time frame from being critically important right now. And as you deduce into the specifics, you can look at the daily, and well, the daily isn't immediately relevant, as in for the open, not immediately relevant. And we can go through these, and you'll be able to do that mentally very quickly. Right, as you see, nice pickup on Tesla. Congrats to anybody who held that 20 moving average. That's a good pickup. Made us wait just a bit. Tesla making us wait. Patience, not really the virtue we are looking for in day trading. However, we will accommodate it if and when necessary. Right? Patience, not necessarily the virtue we're looking for in it's kind of forced upon us, isn't it? Looking at this framework, that's a 1% move from the 20 moving average on the 4 hourly. So we'll mark that. Okay, 6 minutes, what are we at? About 8 minutes into the open. We will mark that as a trade, okay? Without a doubt. Where are we at on Tesla? What's the relevant factor? And again, this is not quick talking. This is exactly what's relevant right now would be. And you can just look at the charts and you know this. Look at this. It's a specific. Bears have engaged where? The 20 moving average on the hourly, okay? It's not guys, it's not a crystal ball. It's literally just the immediate level of interaction with a primary technical focal indicator being the specific 20 moving average on the hourly. It's the most immediately relevant, along with some smaller time frames here to the left. A 30-minute at a target, standard deviation target, in terms of that top side band. Boom. So the smaller time frames will give you smaller trades, smaller moves. You know this. The more reinforceable time frames that we look at in terms of the hourly, the 4 hourly, that 8 hourly, daily, weekly, particularly monthly, the 5 minute hit right into our golden short line. If you're trading, you'll probably develop very quickly. You know this. You'll develop your time frame of choice, right? You'll develop your layouts of choice, and to the extent that you have your setup with, it looks like, you know, this is not a bad pattern to be looking at for Tesla. The reason I drew this line here, we've got a bit of an inverse head and shoulders, if you can see that, right? It's going to require some momentum. We need to get up and out. Bulls need to push up over that 268 free and clear. We need to ride free and clear, understanding that the hourly is our hurdle, right? That hourly is the specific hurdle that the bulls need to maintain up and above. In terms of the specifics, let's look at just left shoulder, right? That head formation, the right shoulder, looking at that framework. We have auto draw in terms of the technical patterns in play. The big question here on Tesla is, will we get a run back to the upside to revisit the level of support on the 30-minute? Right? Will we get a run back to preceding level of support to flip to resistance? That would be a nice move, right? That would be one that would register, clock in at about, what is it, 62 to 65% of the time. We will revisit the level of support on a specific breakdown of a pattern formation about 62 to 65% of the time. I will tell you, it is not that sweet spot 75% to 85% of the trades that we like to engage in. It's just not. So that 62, 65 is a bit off the mark in terms of what we really get excited about trading. It's just a fact, all right? So as we will note that the patterning, which receives some, and with that said, we've got a nice hit on the 20 moving average. Again, congrats to anybody who's tuned in and decided to participate at a level of support a lot more friendly than 2 days ago. It wasn't yesterday, okay? In terms of the specific 4 hourly, pushed well below that 20 moving average. So to the extent that Tesla was a little bit fussy a few days ago in terms of this, just bend down and push below the 20 moving average today, she's made up for it quite a bit. Nicely done. Let's take a look at NVIDIA and see how NVIDIA is doing. And I want to say good morning. The week is shaping up nicely. We won't keep you for too long this morning, but we want to keep you for long enough because we enjoy being with you without a doubt. You know that. So NVIDIA and Tesla on that hourly 20 moving average, right? The name changes, the story doesn't. In terms of the technicals, in terms of the application, we're looking at levels of resistance, right? We're looking at levels of support, essentially. We always say buy at support, sell at resistance, trade your patterns and hit your targets. You got it right. So NVIDIA engaging at the 20, just like on Tesla, right? So we have a confluence there, very nearly coordinated open here for NVIDIA and Tesla. Nice to see. Looking at that specific trade engage on the hourly. We may have a slow going day overall. That 4 hourly cap line is engaging as well. Nice to see that with our pro line on fire and ice. Guys, we do a lot of indicator work. I don't want it to be a group that is over-reliant on anything that's not a fundamental to technical analysis. That's the bottom line. If we look at the 30-minute up and over, we're looking at the inverse head and shoulders, right, on Tesla. We just noted that. Bulls are pushing into NVIDIA, trying to hold the specific, and this is where we slow down just a little bit. Every day we reach a moment where we're slowing down just a little bit, right? We're looking, and after being reminded of how Tesla pushed below the 20 moving average on that 4 hourly, we're looking at the specifics on NVIDIA. NVIDIA currently up and over, okay, up and over the 20 moving average on the 30-minute, which has been a frustrating time frame if you're going to look at targets above versus target below based on a 20 moving average crossover, i.e. Bollinger Band tactic. Okay, it's been frustrating. You can just take a look at it and you can see that we pushed multiple times with a threshold of error up and over. Looks like the lines clean that up just a bit. Okay, we're cleaned up a bit on the lines, but this list just likes to set up and over slightly on NVIDIA, under, over, just under, over. So in line with the additional patterning expectations that we can build into our trades. Yeah, we've had some, I'd say some moves that if you've been bearish or bullish, NVIDIA has accommodated such. If you'll recall the hit to the downside on that lower band. Now, this was a nice larger time frame on NVIDIA, a nice move below that 20 moving average on that primary time frame. Also had the indication on Capline, which is what RSI, stochastic, and MACD all signal bear, boom, to the downside. So that was a great move to catch. Shout out and congratulations to all the traders who chose to catch that move. And you did, way to go. So looking at a reinforcement on the specific 1 hourly time frame, engaging for shorts here on NVIDIA, switching and flipping back over to Tesla on the 1 hourly. Again, what's the story, right? The name's changed, the story doesn't. The specific 1 hourly time frame, 20 moving average. And hope you guys are doing well. Looking at the, I've got like 2 additional screens up on the side here. It's not stressful, but I do have 2 additional screens on the side here where I'm trying to kind of front run any additional conversation or patterns, because we normally will transition. We're about 15 minutes into the trading day here on New York, and normally we will transition. I'll go to separate charts, so I'm trying to front run that discussion just a touch if possible. Not essentially an easy or menial task. It's a bit involved, and you guys know that the market will push you. Don't push yourself beyond your capabilities in the market, right? So looking at the confluence, we appreciate this opportunity in terms of NVIDIA and Tesla both at the 20 moving average. It gives us a bit of a technical, as we look at a technical confluence, right? We have a correlation. Correlation means in this regard, not that things are moving in the same direction, though they are, looking at Tesla on that specific 20 moving average on the hourly, but we have a technical confluence. We really do have a technical confluence, and it's in the context of the following. On Tesla, we have a nice patterning framework here, that expanding volatility, which we brought to the back this morning. Hope you guys did take a look at this specific pattern. And again, it's a great time to revisit what we like to be a part of. The specific expanding volatility, meaning what? Meaning we have expanding price action. We have 2 hits on support, multiple hits upon resistance here. We can tighten this up here to provide more hits along resistance. But what is the key focal here? If we were to look at this specifically, we like to be a part of volatility to the downside with an expanding and descending level of support and an expanding and descending level of resistance, okay? That's what we enjoy. We hunt these. In terms of the probabilities, the value consideration typically is where? Along this level of support. Those are the ideal entries. Do not pull triggers up and over resistance and expect great things to consistently happen. These patterns are important because they will train you to get down into the meat, into the profit equation of buying lower. And buying lower where? Along this maximized level of support, ideally ready for a specific partial move pickup. Okay, you can get a GAN fan out if you choose, but in terms of a partial return, no problem. But these are the specific patterns that we enjoy working with. Without a doubt, we hunt them all the time, and Bitcoin loves to trade these. Bitcoin really, really responds well to these specifics. So long at the 4 hourly 20 moving average is a story on Tesla for a nice trade on open, short at the 20 moving average on the hourly. So bulls and bears getting a bit of action here on Tesla. Nice to see. And if we were to look at, you just see this engage, boom, right? You just see that engagement, those trades just, yeah, it's just satisfying the traders' need to trade. And again, the whole point of trading is that we have something that is highly liquid, that is respectably situated in the market to where we can take advantage of profits. That's it. We're not going to be sitting here just for a good time and not focused on profit. So to the extent that the assets that we are focused on underperform, we note such without a doubt. I'm flipping over to Bitcoin here for just a moment to take a look at technically where we're at. And the 4 hourly jumps out in terms of the specifics here, as well as the rising wedge, which we really haven't been able to beat. This is a problem with rising wedges. It just is. This is why I'm not a fan of rising wedge or bearish breakouts. Rising wedge with the constriction of resistance and support, right? We prefer flat top resistances and ascending lines of support for bull activity. Okay, so anytime that we have a potential breakout with a bearish structure, we note such. You hear me comment on it all the time. We try and push through, we try and get through, and I just remind you that the specific lower entries govern in situations like this. You can get into the macro, you can get into the participation of the wave formations here, okay, this oscillation or the range, these swing trades along the way. What I will say is, as we respect this level of resistance thus far, the frustration is this rising wedge. Just to recapture the absolute fact here on the 4 hourly on Bitcoin, quite a bit of volatility, nice to trade. We're seeing quite a bit of return action as I see out of the corner of my eye, Tesla picking up on the 5 minute. You guys catch that on your screens? Let's see where we're at in terms of that 5 minute being. And guys, if you have the screens up, you're going to catch this stuff, okay? You're not going to, and if you further focus in on, say, I want to trade one specific asset, you're going to catch these. Moves. You see the hit down into the 20 moving average on the 5 minute. So amidst this tug of war between the bulls on support on the 4 hourly and the bears on resistance on that hourly, you've got the specific 5 minute engaging as kind of a micro deciding level, and it's going to be up to you whether or not you can actually engage on this 0.24% move. They're tight. That's tight, guys. You know that's tight. We would start to, at this point, say it's time to get into some pattern formations. Let's dig into the back. I know some VIP this morning who are a bit busy having a bit of fun, relaxation, R&R out of town. I don't want to interrupt that. Without a doubt. Why would I ever interrupt that? Let's take a few, and congratulations on taking a bit of time. 3 minute candle set underneath the 20 moving average. Where's your target? Boom, to the downside, right? It's being looked at in terms of that engagement. What is a nice specific move here? Specific set underneath the specific 20 moving average on that 3 minute. Again, these are tight moves. That hourly and 4 hourly dynamic is bringing into question the specific, and before I even really get to it, you're going to look at a confluence of what? The 15 minute becomes relevant. So before I can really process this and speak to all of it, if I can go through the actual process, if I can actually explain to you what the key considerations are, okay, then you can start to identify these. And while you're going to be 8 to 10 seconds behind the march here in terms of the technicals, understand in the time it takes me to process this and deliver it vocally, literally we're pulling in additional factors consistently. The quicker you get at this, the better you're going to be, without a doubt. What's the struggle right now? We have the specific 15 minute pickup on the 20 moving average, okay, which flies into the equation as we look at any hurdles to the downside after a set on the 3 minute, boom. And then what's the hurdle for the 15 minute to the upside? Okay, as we look at a hurdle to the 15 minute to the upside to traject back up and above the specific, here we go, 20 moving average on the 3 minute. So underneath, okay, looking at a push to the downside interrupted by what? That 15 minute 20 moving average. Just understand what's going on right now. Understand that this level engaged, okay? And it's just important for you to be able to assess this in some non-destructive manners for your trade accounts, without a doubt. But as you assimilate and let's say acclimate to the speed at which things begin to process, you are doing nothing but getting better in the market. I know that for a fact, and I know how good you all are in the markets. This micro flash trading processing is a real specialized skill, and it's nice to see you all be able to apply this, not only at the lower time frames, but as you begin to apply this to the higher time frames. And you're going to see this screaming level of confluence as well here. We would have this 20 moving average on the 30 minute. What I'll say is, as you begin to apply these to the higher time frames, right, this is where things become very interesting, okay, as we're going through, and this is why I like small time frame action in terms of the specific assets, looking at the cap line. Multiple shorts along this level, okay, the RSI stochastic and MACD, okay, looking at the specific 20 moving average on the weekly for NVDA. This is a sweet pick up. You may not catch any of this, all right? You may be very slow to react or not react at all if you haven't been through the morning sessions. If you haven't been through the micro, I always say that we pay attention to the micro and look at NVIDIA pushing immediate relevancy, that 1 hourly 20 moving average. Now bulls are excited. We're up and over that. What is it, guys? And we know this to be, as we look at that 1 hourly on NVIDIA, we know that that 438 is also that 20 moving average on the hourly, correct? Hey, we got it, okay? Now we're on the specific 3-minute identified cup and handle. If you were along on this, congratulations. 238 it was a level that has to be beaten, now has to be reinforced. So as you look at the lower time frames, where are orders? I always encourage you to understand, instead of playing breakout trader, don't go for it, guys. Do not get suckered in on a breakout trade. Just don't. Where are orders? Where are orders right now below at lower levels of support, right? Below, as we look at a potential breakout here, below at a specific level of breakout on a cup and handle. You got it. So we've got a bit of a bull flag brought in the back. We have that hurdle, and I like it's worth noting, each specific preceding pivot on any type of a breakout is going to be a potential hurdle. Now, in line with this specific flat top, I don't want to undertalk this move too much on NVIDIA, but understand the processing and procedures here, how quickly you can learn, and you have learned, to assess these specific dynamics. This is not a favorable, arguably, breakout, is it? Is it one that you want? It's got a rising wedge component to it. I'll bring it up now. If you're sitting there with the finger on the trigger and about to hammer into this, I want to bring this to your attention just out of full, guys, out of a level of comprehensive approach to the trading analytics, without a doubt. You need to be aware of this rising wedge in the context hereof. So this is going to be something we're going to want to look at the other time frames. What levels are engaging for the bears? While we're looking at bulls pushing up, I'm immediately interested in what levels are engaging for the bears. That's the way, guys, that's the way to handle these specific issues. Looking at a golden short line on the 5-minute for NVIDIA. Relevant. We're going to need momentum. Obviously, once we have the breakout, that's fine, but looking for momentum. We know that we're along that 1 hourly 20 moving average, and this is relevant to the extent of what? You could sit there and say and critique, well, everything is just too complicated. Everything is there's always a hurdle. There's not always a hurdle, okay? There's not always a hurdle. So when you hear complication, when you are presented with a complication, please try and compare that to an instance where, well, this is a great trade. There seem to be no specific hurdles. I'm not looking at hurdles for the bulls. When that arises, that's a special circumstance. That's a special opportunity for you to potentially trade. So while we go through the dynamics here, literally every morning, as we go through the dynamics here every morning, what we're going to bring is a level of complication frequently a level of complication. When that level of complication is not there, recognize it, okay? Appreciate it when we don't have that level of complication. It's just a fact. The technical analytics are the technical analytics to the extent that we can forego the complication. As we do delve into the technical analytics, you will see a potential streamlined trade, and that can be a sweet deal. For instance, I won't bring up recent trades, but you know that's kind of that's the whole idea of being in the market. It's like, man, now imagine once a month the market's going to give you a nice, big, solid move trade, period, boom. It's going to be free and clear of hurdles. It's going to allow you to really capture some profit. What you don't want to do is chew up your experience or your account in the process. Guys, your available funds, whatever you would look at. You've got truly disposable near levels of wealth. I've seen people be really reckless in the markets. I'm not sure that's really a good approach either, right? Because then it bleeds off beyond any level of success that could be appreciated, okay? And please note that. In terms of just being respectful of your participation in the markets, seeing a trader who's able to identify really unique circumstances in the market when we're just clear sailing, guys. There's just no hurdles at all. Those are the opportunities we look for, and when we see them, we note them, and you know that. For instance, and I just bring it up because it's such a great trade. You know this in terms of Tesla, as we look at Tesla engaging on the hourly. So NVIDIA and Tesla playing a big coy. We can definitely appreciate that. Again, Tesla, which had been strong, along the way up with a huge, nice gap up move, reinforced at the hourly. Okay, NVIDIA we had seen that confluence, right? And then we have NVIDIA up, out, and over for a moment, that specific 20 moving average. The good thing is you look at this rising wedge feature and we see a bit of frustration. What are you aware of on the smaller time frame for NVIDIA? You're aware of the fact that we are just pushing along this 20 moving average on the daily, or on the 1 hourly, rather, corrected there, on the specific 1 hourly time frame. Not on the daily. Daily would be a nice re-hit, wouldn't it, in terms of that 20 moving average? But no, that's the hit on the daily is along that specific lower standard deviation. So sorry for misspeaking there. In terms of the pattern dynamics, just let this serve as one good lesson. In terms of a bull flag identification, we brought this into the equation a bit late in terms of a rising wedge. Doesn't mean that it cannot play to the upside. What would be a reinforceable mechanism to get price up and out and over here? What would we look for? If we're looking at a specific rising wedge, what do I typically like to see? I like to see some sort of a potential fan formation. You know that I like to see an anchored seat here. I like to see that buyers are consistently pushing a level of resistance flipping to support. I like to see that reinforced at the next level. Here we go. I like to see that reinforced at the next level, and then I like to see that momentum push, boom, up and beyond. So you can see the attempt here if I clean up the framework. And again, this is in the context of what? Of a rising wedge, okay? In the context of a rising wedge, I like to see the specifics through another market opening. You're welcome, Venus. It's my pleasure. I like to see, and we don't have a particularly great fan here, do we? We do not have a perfect line here or a perfect line here. Particularly what we don't have is what? We don't have that full throttle move, boom, to the upside. This is where the rocket fuel is either going to engage many times or not. So looking at those dynamics, it becomes relevant to the extent that, yes, we brought this to the table a bit late in terms of consideration, but when you're at the point of breakout, train yourselves, please train yourselves to consistently look for a mitigating factor. Listen up. Consistently look for a mitigating factor when everyone is looking, what? Bullish. Okay? When everyone's looking bullish, look for a mitigating factor. Okay, look for a reason not to hammer into a long. Train yourselves, please, to look for a reason not to hammer into a long. You got it. If you can do that, it's not that you'll be overly cautious, but you'll at least be prepared. Okay, at least be prepared to not get the trigger finger, guys, in terms of this. You just cannot get trigger happy with longs and exposure up and over really consistently any pattern, or down below consistently any pattern. Who is in the safe zone right now and not sweating anything? Longs from below on NVIDIA. You got it, right? So as you look at this, this stressful breakout here, just understand that it becomes tolerable if you're involved and you chose to be long at a lower point if you caught a drop, etc. But at that breakout point, the market is an expert. Literally, it's been studied and perfected. The degree of psychological programming that it puts you through, the degree of stress, your cortisol levels, your fight and flight responses, it's all tested. It is not supposed to be a easygoing routine. They test it literally on human beings. Probably, guys, you've seen the video that I provided a while back. Some of that stuff just gets outright scary to look at it and think how well prepared the market is to put you through a bit of a routine more than what you bargained for. So to the extent that we can circumvent that, what's the lesson here? In terms of a breakout, any breakout, just guard your position, guard your experience. Again, what's the goal? The goal is to enjoy the market. Yes. And the goal is to enjoy your profits from the market. Yes. So that is that's just the first and foremost in terms of what we try and focus on. And you don't have to knock the lights out. You just don't have to hit the home run and knock the lights out. If you're trying to knock the lights out in far left field or over center field from the plate continually, guys, it's going to be a tough time for you. In terms of the patterning and play on Tesla, for the record, I like the patterning. My big question is that 62 to 65%, I note it as a complication because it's not that 75 to 85% that I like. It's just not. ascending triangulation breakdown. I like this pattern framework, but where do I really like entries here? Where am I prepared today along with the Powell, etc.? I'm prepared down here. I really am prepared down below on Tesla. This is ideal for me. Okay, in terms of the level of volatility, these patterns are perfect for traders because they encourage you to participate in volatility along a level of support. And when we get the participation at the lower level of support, it is worth commenting on without a doubt that these can be dynamic. Boom, nice moves without a doubt. That's why we focus on them. We call them bell pattern formations. VIP, we rock the bells. That's the bottom line. You know that. Let me shout back out to Venus, but my pleasure. And in terms of the open, let's see, my pleasure, and boom, hope you're doing well this morning, Venus and all VIP. So let's take a look at some other charts real quickly as we look at a reinforcement, really a reinforcement of NVIDIA on that 20 moving average and pushed. Reminds of what? It reminds of Tesla on the specific 4 hourly. Yes. Today, guys, take a look. The 4 hourly candle set up and over. Some traders will wait, and I don't mind at all. If you look at the specific line chart here, you have a different story than if you look at the actual framework, and this is to be noted, heavily noted. If you're looking for action immediately upon the strike or hit of a 20 moving average, it's going to be more aggressive. A much more, not complacent, but let's say conservative and potentially overly conservative approach would be just wait for the candle to set. And on a 4 hour time frame, it would seem, though we haven't really addressed this the last number of days/weeks, though everyone in VIP, you know my preference is to always look at the candle set, without a doubt. Does the candle set over or under? So this can be taken out of the equation for more conservative traders. That's just the bottom line. That's just a fact. So we look at the hit on the 4 hourly today. Do note that this push down and below on the larger time frame, Tesla 4 hour, is recreated here in terms of that specific throttle up and above NVIDIA on the hourly. We have the lack of respect, the attempt for bulls to push up and over. So what will become relevant? Well, in 23 minutes and 43 seconds, we will have a candle set. Will it set below or above, right? Bootstrap that lesson in from the Tesla circumstance a few days ago on this 4 hourly to look at that candle set and just incorporate that into your trading. Pushing up and over yet again. Here go the bulls yet again on Tesla. Looking at Tesla into the 20. And what's happening is as the bulls, if you're directionally focused up, what's happening? You've got a group of traders, bears, who are literally just sitting here with a full throttle framework on the 20 moving average and just boom, getting paid, boom, getting paid, boom, getting paid. So you don't necessarily want to change your direction. You always want to or feel that your direction is wrong. Ideally, what would you like to do? What would you like to occur in the markets? You would like to appropriately saddle your direction or streamline your direction in line with the maximum probabilities, not 51% versus 49, not even really 60 to 62. You know, guys, at 60, 40, we like the 75, the 85 zone. That's where we really get to make some big moves in the market and make it look easy. Now, if you're not accustomed to trading at this level with the level of sophistication that we bring to the table technically, I'll just tell you, if you're not accustomed to it, this can seem, this can seem far from easy. What we've discussed today, you can look at it and say, oh, you can say that could be easy at 75 to 85%, but look at the level of technical proficiency that's required. That's just, you could just think it's insurmountable. However, it's the ability to synthesize this information at this speed, which is required. It demonstrates a level of understanding which you all have. I always say I'm not teaching. This is important. I'm not teaching. I'm not really mentoring. I'm not doing anything. We're having a discussion. You and I are having a technical discussion, and you're firing on all cylinders. And it's nice to be walked through these issues as we remind ourselves in terms of our trading approach that we're able to have this conversation. Not everyone's able to have this conversation. If you were to literally just, what are those situations, you've been to the fair. It's, you know, the dunk ball. I just have to bring this up where we're waiting for this same level to engage here. But you know, you go to the fair and you throw the ball at the person sitting on the chair suspended above the water, and you hit the target and boom, they go down. That's essentially, if someone's going to walk into this room and not have an idea, okay, of what they're doing technically or any kind of expression, come on, guys. It's not going to be fair for the guy sitting in the chair. Whoever walks into this room is a very mild-humored, I just say attempt at some early morning. I think the analogy is spot on. It's just, you know, we're going to hit the target. We're going to be talking exactly the way we need to, and they just boom, down into the water. It's not going to be fair for the person in the chair, whoever decides to sit in on this room very quickly. So we understand that, and we are excited that you're here anyway. And yes, you can learn. I promise you can learn. Inverse head and shoulders, pushing on Tesla. What do we have? We have the market that's dragging into 40 minutes now in terms of the open and doing what? Pushing into the same level as it's already paid who? The bears. So the bulls are trying to push up and above on a day where we have some structured information incoming. The quick and easy was what? Now do you remember? Hey, now you remember. Was it 6 to 8 minutes into the session? You got it. Why did we mark it and tag it? We marked it and tagged it because now the market has done what? It has taken your time. That is it. And we're still at this same dogged level that has been trading the micro traders here on Tesla on the 20 moving average. You got it, right? On NVDA, just stand still, pushing into what? Cap line, okay, on the 4 hourly, underneath the specific hourly 20 moving average, trying to re-engage nearly upon that 30-minute. So we are up and over on the 30-minute again. What do we remind about that 30-minute time frame on NVIDIA? It's had some difficult backtesting results, okay, as we were to look at the over-under 20 moving average expectation of a hit on the opposite side band. Now let's look at Bitcoin, see if we can derive anything positively out of Bitcoin. What was it, the hourly? I think we looked at the hourly beforehand, bringing in, I think it was the hourly. Yes, it was. This morning, the chart that we brought was something along these lines. And I normally will have a red, please pay attention, I'll normally have a red pattern designation if I want you to be able to really see it. Sometimes I'll coordinate it with a bull, or that'll mean red bear. No, normally I just want you to be able to really focus on it and see it. Right, so when I bring this pattern this morning, it was in red, but that level reinforced. Let's take a look at what Bitcoin has done while she has stolen the show several days in a row. About a 0.6% move, maxed out a bit higher than that. And you see the flex here below. So this is the specific triangulation in play right now. And we'll just say that amid stealing the show and diverting some attention away from Tesla and NVIDIA and some other investments, that it's not bad to see a little bit of a quiet morning for Bitcoin, with the understanding that we're pushing up again into this top level resistance. It's not an easy level of resistance. It's engaged multiple times here. And incidentally, glad that I left that on the table. Was it 2 days ago when we were engaged on this level of resistance? It was a nice level of engagement there. Boom, multiple times really hit into here. And we have a structure in play that's noteworthy. As we were to let's look at that hourly. We really have a nice framework in play structurally where we are looking at a level of resistance carried down to a level of support. I put a regression trend on that specific, so you can see some calculations with standard deviation, etc. But looking at that specific channel framework, that's going on immediately. That's essentially what we have, which is just a grind to the upside. Now we have two ways to look at this, as we've discussed recently. One is that we are just heading up to a point of breakout. The other is going to be that this could be, we want to recognize this in terms of anytime that you see a channel formation, okay? It could be designated in terms of a target. Right, we're heading to a target for breakout, or we are formulating the internal componentry required for a pattern. You got it. So as we were to look at and project from this specific channel to the upside, traders might like to see, okay, an additional move to the downside and an additional channel formation. You got it, as we construct the specifics of whatever pattern may be generated and in play, okay? So as we were to dig into the technicals in the back, that's where we're going to head now to ensure that all of you are guys firing on all cylinders. I know that you are. Congratulations to everyone in the new indicator. I want to bring this to your attention very quickly because it is something to look at. We're consistently looking at, it's not a plug, this is just a fact. I'm excited to be able to have brought this to VIP. I see you flipping through your charts so frequently, looking for, if we were to look at Tesla right now, looking for your momentum. Your momentum is on every single, let's just look up, let me show you here. Let's walk through this very quickly. Let's see, Rocket, I think multi time frame. We'll look at, I like Rocket. If I can look at Rocket 33, price momentum, MACD. Okay, as I were to look at this specific momentum, okay, now you can get to momentum, AKA squeeze, two ways. Pay attention. You can get there two ways, okay? You can get there either through a squeeze calculation, which includes Bollinger Band and Keltner channels. Okay, that's what's going to typically be called squeeze, all right? Or you can take the MACD standard equation. This sounds complicated, it's very simple. You can take the MACD standard equation, you can forget about the squeeze, okay, the Keltner channel and the Bollinger Band, and you can take a MACD equation and input the moving averages of 15 and 199. Now, why is that? It's something that we have discovered, I've discovered through back testing. So to the extent that you're hooked on squeeze, you're really looking at MACD. That's relevant to the extent that you're going to say, well, am I looking at now something that really doesn't even comport with MACD? MACD has some facilitated moving averages on it, okay, but the momentum shifts here. As we look at the momentum shifts, we like to look at momentum, all right? We like to look at the momentum as indicative of where price is heading. This is on the 8-hourly right now. Okay, if we were to go to the daily, what's important here on the specific, let's just say on the specific new indicator that you have is the replication from time frame to time frame, okay, on guys, any time frame that you choose, on any specific time frame, active time frame that you choose, you'll be able to say, for instance, well, this is the weekly. I see the weekly versus the daily, right, versus the 4-hourly, okay, here below. So that it can prevent you from having to dig in deeply to the specific lower time frames or the higher time frames to check where is the hourly. Okay, the hourly is right here. You'll get used to it. You can adjust the coloring as you see fit. You can dig into the settings. And to the extent that I'll call this a prototype, I still should call it a prototype because it was a long time in the waiting and quickly assembled. And I appreciate everyone who made that possible. Looking at the hourly, the 4-hourly, the specific daily, and the weekly. If I don't want to see the weekly, I just take it off. If I don't want to see the daily, I just take it off. If I want to change the color here of the 4-hourly, no problem. If I want to change the color of the 4-hourly, I want to change the color of the 4-hourly, and it's not a big deal. Use this as you see fit. Make the adjustments that you see may be required. And just explore the opportunity that it may provide you some insight into the market in a circumstance where it can increase the level of efficiency with which you operate in the market, okay? Just explore that possibility. Seeing, for instance, I just know here, the specific daily looks like this blue line on Tesla. It's not where we want it, is it? The weekly seems to be dropping. The daily specifically seems to be dropping. But I see here, for instance, on the weekly, it looks like, well, we had a big divergence here on that weekly, yes, precedingly. So I may look at Tesla and be like, yeah, I'm looking at Tesla. I don't like the way the weekly's interacted recently. It's gone. It's off the map, right? I see a better confluence with this daily, really nice confluence. Pay attention. On the specific daily momentum, thrust to the upside, boom, boom. That was the move. That was nicely done. You got that right. And precedingly, I'm seeing on that daily, that blue wave structure here, boom, nice move to the upside, right in here, coincides, correlates perfectly well with this move here, boom, to the upside. So I see once we get into that falling or that drift, at least sideways, but at least the falling momentum here, it becomes relevant. When can we traject back to the upside? So this, in addition, if you'll look into the specific, now we're looking at the 4-hourly. 4-hourly is maybe not going to be as advantageous as the daily, unless and to the extent that you're catching the specific visuals underneath. This is where, if you want to fine tune this, this is the 4 hourly here, always ready for a divergence, understood. But this specific 4 hourly here is heading to the upside. The daily makes the turn. The hourly swings back and boom, boom, everything is aligned as we make that trajectory move up here, bam. So you'll see the micro time frames really begin to express themselves unless we have a bit of a divergence, which I would encourage you to look at and back test visually. Thereby, if you choose to remove a specific time frame, just do so. But I think that this indicator has some real solid potential, okay? And the approach to this indicator has some real solid potential that I don't see replicated in the markets elsewhere. I don't see multi-band and multi-time frame functions that can prevent a trader from having to flip through multiple time frames. So I'm very excited about this. And again, I appreciate everybody who made this possible, without a doubt. Looking at the specifics, I encourage you to backtest NVIDIA. Take a look at it and backtest NVIDIA on the weekly. Take a look at the daily. Take a look at these moves. Where has this daily been? Right on. Where's the daily been? Right? Where are we? And as you assess the backtesting, make sure you take a look at how consistent or inconsistent have the preceding. Even here on the daily, you may want to bring this into question, right? You may have, and you will filter through and decide certain factors that are crucial in terms of your, I'd say the requirements that you have to enter into your trade. And as you look at those crucial elements or those deciding factors, understand I would prefer you to have one look at all the time frames and the momentum from all of the time frames, rather than having to nearly memorize every time frame that you're flipping through. If you have a favorite time frame, go in and select it, period, and view that specific time frame. You say, I only want the 4 hourly. I really just want the 4 hourly. That's it. Just give me the 4 hourly. Great. Now you've got the 4 hourly on the 8 hour time frame, or on the daily time frame, you see, or on the weekly time frame. Now your 4 hourly is expanded to where you still have that specific indicator as it would relate to the 4 hourly, or even on the 30-minute, you'll be able to assess that specific 4 hourly, whatever your time frame may be of choice. I'm willing to receive feedback on this, and again, it is in a prototype level of development. So we're looking forward to this afternoon as we see a hit on into the 15 minutes here, boom, of the 20 moving average on NVIDIA. Again, we can trade all day. Oftentimes we do, if you do as well, and you're looking forward to beating the markets, guys. This is London with Bitcoin Spike and VIP Trader. Want to dig into the back? We will be trading all day, and if you are guys, enjoying the market, enjoy it responsibly. Remember, former hedge fund owner, private non-SEC, not financial advice. Duke University, Harvard Business School. Hope you're doing well. We'll talk to you soon. We'll try and catch the close. Way to trade, and we'll mark that at 8 minutes a day. Nice trade out, guys. It's about working into an hour here on the trading day, and we'll look forward to some additional volatility. And will you trade the FOMC decision? Will you trade the interest rate decision? I look forward to being in the back and doing so with you this afternoon. This is London with Bitcoin Spike and VIP Trader.